Hello, I'm Mario Toneguzzi, managing editor of Canada's podcast, Taking Care of Business, today with Don Desjardins, who is Chief Economist of Deloitte Canada. Thanks for joining us today.
Oh, it's my pleasure, Mario.
Well, newly appointed as Chief Economist for Deloitte Canada, let me just ask you a little bit about that, Don, and what you will be doing in your new role.
Well, I've been asked to join the team talking to the leadership here at Deloitte about how the economy is evolving, what trends are coming to light, and as well to speak to clients who are also, wanting to understand where this economy is headed, given the extreme uncertainty it seems we've been under over the last several years.
Yeah.
It's really trying to provide them with some context about how the economy is likely to evolve.
Well, let's talk about that economy, and let's focus first of all on the present and where we're at. How would you describe what Canada's economy is like these days?
Well, I have to say, it's much more resilient than I would have anticipated it being. Certainly, we're seeing the first quarter actual expansion in our economy, and we've seen such significant job increases. So, definitely a situation where things seem to be on fairly solid footing, despite the fact that we have seen interest rates move up 4 percentage points. So it is a little startling, I have to say,
Yeah.
in terms of just the amount of momentum the economy is carrying forward.
No,
I, sorry,
go
go
ahead.
ahead.
Sorry.
I was just going to say, we think it's probably going to flag. Don't want to be a downer, but gotta say, the impact of these rate increases will eventually bite, in our view, and we think that that will see the consumer, step back a bit, and businesses, also looking at if they want to finance any expansion, it's a lot more costly.
Hmm. Now, can you talk a little bit about the reasons, like why has the Canadian economy been so resilient?
Well, I think it has a lot to do with the demographics of our economy. We have a lot of people who are in the older age bracket and are retiring. And so you're seeing a lot of more people, a lot of new people move into those jobs. We've got good growth on the immigration front. So we have more people contributing to our labor market. We also see a situation where Canadians had amassed a lot of savings during the pandemic.
Mm.
Now that savings, buffer, if you will, I think it is coming down, but nonetheless, it is insulating them a little bit from these higher costs. And we know that, when central banks raise interest rates, it does take some time for it really to filter through and impact consumers to the most that is going to do. So again, it's impacting some people, of course, people with variable rate mortgages. They are feeling the pain of higher interest rates right now. But people who have fixed mortgages, fixed rate mortgages, that's just going to be an iterative process as they renew at different times during the cycle. So I think you got this combination of still firmness in the labor market, and as well some people who are at this point anyway insulated from these rate hikes.
How would you say the Canadian economy is doing compared to other countries globally?
Well, I have to say, I mean, when I'm looking at different countries, it does seem that by and large, a lot of, like, even look at the US today, we had some very strong sentiment readings from the services sector and the manufacturing companies. So, yeah, things are slowing down compared to the really hot days when we were just evolving from that pandemic. But still, some of our trading partners, our biggest trading partners, are still doing okay. But having said that, I do think there's lots of risks to the outlook. When we think about what's happening in the U.S. financial system, certainly it's been contained so far, touch wood. But when we think about, are there other shoes to drop on that front? And the rates in the US, of course, also having moved up so substantially. And of course, central banks are very committed. They want to get that inflation rate down. Now, we've had some mixed results on that front as well. So they, conceivably have more work to do there.
So, when we looked at the economy a few months back, when people were forecasting and stuff, There was a lot of talk about the recession. What are your thoughts on that? Do you think we'll see a recession this year?
I mean, I do think we're going to see a significant slowing. Will it be, your technical recession of two back-to-back quarters? Very possibly can be. But I think overall, what we believe is that even if we do see one of these downturns, it will be relatively mild. It's not going to be, a huge downturn that we've become accustomed to in other, recessions. But having said that, we do think that it is going to take, these high interest rates are going to take a bite out of the activity. It's going to take time, as I've said, but we think it is coming.
Okay. And what do you think is happening with interest rates going forward?
Well, I mean, we don't have any further rate hikes in our forecast, but the risks do remain that if we continue to see strong labor market data, we do see inflation that remains very, very sticky. Central banks may feel that, they have to do something to show that they're serious. Not that they haven't shown us they're serious so far, but they may want to do, a little bit more. Now, again, that's not our baseline forecast. We think we'll start to see some of the bloom coming off of these economic indicators, and that'll give central banks the window to just let rates be where they are, to pause, to maintain this pause. I mean, we think that they will be successful, as I say, in slowing the economy. It's
Mm.
just taking a little longer than normal.
Now, Don, when you're looking at forecasts and looking into the rest of this year, what provinces are the quote the winners, I guess, for the rest of this year?
Yeah, well, I think the provinces that have, elevated levels of household debt in their balance sheets, where they've had significant run-ups in their housing markets over several years, you're probably going to see that bite, that pain being a little more firmly felt in those provinces. So whether it's Ontario or British Columbia, you're not just going to see as it'll be a little deeper bite, let's put it that way, than some of the other provinces. I mean, with energy prices remaining elevated, you do see the energy producing provinces being able to maintain a firmer pace of economic activity.
Mhm. I was going to ask you about that, the energy sector. What's your crystal ball when you're looking at oil prices and what's going to happen there?
Yeah, I mean, they have moved lower recently, and we kind of have them sort of a little bit higher, but not materially harder. So kind of as more of a steady state, probably around $75 on WTI.
Hmm. Yeah. Now, Don, not to age you or anything, but I'm just wondering, how long have you been an economist?
Oh my goodness, you are aging me. Well, I was 16 years at RBC, and I worked as a bond market strategist at JP Morgan for 10 years. I mean, these numbers are getting kind of big. I'm going to just stop. I have other I could add, but I'm not going to.
Oh, what I was going to ask is, I'm just kind of curious, over that period of time, has forecasting the art and science of
Mhm.
forecasting, how has that changed? Has it become more difficult, or easier now?
Well, I mean, it's always been pretty difficult. But the thing is, we have more data now, and
Yeah.
we have more data that is almost real time. And so that does help us, quickly figure out if we're on the right path or the wrong path with our forecasts. But we also have, such significant geopolitical risks. We have, so many different factors to bring into these forecasts now,
Yeah.
that I think, yes, we get some better information in real time, but we're also facing an environment that is extraordinarily, I would say, uncertain.
Mm.
And so it does, the basic forecasting, I would say, is still intact, but we have just different tools and different ways to look at it. And I think, that is helpful.
Hmm. Well, thanks very much, Don, for joining us today.
Oh, it's my pleasure, Mario. Thank you for having me.
All right, that was Don Desjardins, who is Chief Economist at Deloitte Canada. I'm Mario Toneguzzi, Managing Editor of Canada's podcast, Taking Care of Business Today. Thanks for joining us.